Hello and welcome back to another video. My name is Jared and today we're going to be talking about the buy and sell call outs that I made in the month of April and what I'm going to be doing going into the month of May. Hopefully you guys went and saw that video. There's a lot of good info in it and we're going to move forward with those same stocks today and see if there's still a buy, a sell, a hold, what is going on. And if you enjoyed this video, please smash the like button. It helps out a great deal. Share with some friends. Subscribe if you want to see more videos from me. And let's just get right into it. So, we had a lot of earning calls. Companies are calling earnings this month, last month, and this month. So, we still have quite a bit to go. We nailed out some of the Mag 7s. I did a video on them previously. I think it was only a few days ago at this point, and see where we're going with those. So we're gonna discuss some of them today. Not all of them. We're only doing the ones that I originally called in my previous video. See where I called them at and where we're at now. So Amazon, I called the buy at 238.38, and I called that we would see over 250 after earnings. Right now, it's currently at 268.26. I do believe, even though I had a anticipated stock price of 250, I believe Amazon is still a buy, especially since we are up at this resistance marker at 273. I believe that we're going to break through, go to all time highs, and we're going to keep on trucking to exploration territory. I think Amazon has too good of financials behind it, and they just got so many good things, and their AWS and everything is expanding at such a good growth rate that it's a buy. If you're looking to buy Amazon right now, you're not going to go wrong if you're buying for the long term. I fully see after that earnings call Amazon going into the 300s at this point easily. With that being said, Amazon is still a buy. Big Bear AI, I called to buy it at 335. I called the price anywhere between $6 to $7 is what I anticipate to see. We are currently at $4.14. As you can see, we just broke over this resistance. We've been at this resistance at 396, right around $4 for the last few weeks at this point, and we're struggling to gain any kind of traction up, but the momentum is gaining to our favor. There's a lot going on. They do a lot in airports, security screening, things along those lines. They have a lot of contracts there. During the last hype cycle for Big Bear AI, that's what everybody was talking about. You just had Spirit Airlines close. So it's not like airports are in the best of shape. You have a lot of TSA stuff going on as well, that they're going to be pretty much redoing a lot of that kind of stuff. So we'll see where Big Bear AI goes with that. I believe that we're still on track to be able to hit this resistance at about $6. I would say by the end of the year. That's what I'm holding out for. Right now, is Big Bear AI still a buy? I believe anywhere under $4, I'm going to pick up more shares. I think we have upside coming to us pretty relatively shortly here. And they do still have a lawsuit going on, so things are always subject to change. But this is not going to be a 1 month hold, 3 month hold and sell, flip kind of deal. We're buying these for the next couple years, and I think they have growth potential and profitability potential behind them to where they could turn into a pretty big earner for my portfolio. So that's why they're still by under $4, moving my DCA pricing down, and hopefully we see that $6 mark shortly. If we see the $6 mark shortly, then I will be selling my call options on Big Bear. That is kind of the plan as of now. All right, CRM. CRM is a part of that SaaS apocalypse that keeps happening. It's nonstop. ServiceNow reported earnings. They had very good earnings. They just missed on a couple of key aspects that just caused all the SaaS stocks to take another hit. My average cost into CRM is $214.31. It's currently at $183.82. It is still a buy. Let's take a look at the chart here. I'm going to close out of these couple, maybe. So CRM, you can see right back here is that hit I was talking about. We just saw 167. I picked up some more shares at that point. I picked up again some more shares at this 172 range. And we are back over our resistance marker. We bounced off of it'd be our 50-day moving average and came back down to that resistance bar at 181. We do have uphill momentum trying to push us up, but I think we're going to be playing around this range until earnings are reported. Until that point, I believe ServiceNow is still a buy. You can see even on Friday, it was up $7.29. You still could have been picking it up for 176 in that range, which would have, or 178.75, I guess, is what the day range was. So it was still a great opportunity to be picking up Salesforce. I believe people are starting to see in the news that they're starting to actually start showing how AI is going to be beneficial even for these SaaS companies. SaaS companies are going to be charging for the AI usage through their platforms. This is going to be another stream of revenue for them that I don't think people are anticipating. Is it going to be in this earnings report? No. Is it going to be in them by the end of the year? I believe so. That's why these SaaS companies are still a buy. Where would I continue buying Salesforce? If we keep hovering around this 181 bar, it's a great buying opportunity. I definitely see us coming back up to this 220 around earnings, depending on how the earnings pan out and the future guidance pans out. That's going to be one of the biggest things for Salesforce. So we need to be paying attention to that earnings call. Watch out for that future guidance. And if the future guidance is going to start talking about that AI implementation for them, then I think we have nothing to worry about, and we're going to be spiking almost to all-time highs. That's only if the earnings reports start going good and people start seeing this SaaS apocalypse for what it really is, or what I perceive it to really be. All right, going into one that I am using as a picks and shovel style play. It's Realloy. They are actually going to be a rare earths plant. Foundries, factories, they're getting parts of mines, getting all that good stuff going, and they are still actively making it happen. So once again, this is not a tomorrow stock. It's going to be $100. Now, my price target for Realloys is actually going to be around their all-time highs. If we go to all-time highs, you bet your britches I'm going to be selling a little bit. It's kind of a speculative play, and I want to make sure I pull some of my profits and cover my exposure. Lower my risk, keep some reward on the table. I don't want to completely sell out of them. I do want to make sure that I'm maintaining a significant part or a significant amount of the shares that I own, keeping them in there, but I will probably sell about 20% of my shares if we get towards the all-time highs, around probably 25-ish, somewhere in there. That will cover most of my cost of purchasing the shares. And then at that point, I am extremely low risk and pretty much only upside from there. That's my view on alloys. Right now, we are bouncing off of a resistance bar at $10. We went over $10 on Friday. We don't really have the momentum to keep carrying us upwards unless something sparks off in the news. if I ran or the straight opens back up, that could be the spark, something along those lines to get some momentum back into the company. You can see the last time we had momentum, we swung up, but I believe we're right here. So we're going to swing up a little bit and then we're going to come back down, and it's going to be a buying opportunity moving forward. And that's exactly what I'm going to be doing. Anywhere under $10, I am a buy on alloy. Elf. Elf. I bought it at 64.76. You guys saw that on the previous video about a month ago now. It's currently at 60.49. It is still a buy. What we need to remember about cosmetic companies, beauty companies, Nike, all these companies, which Nike is coming up here, so this applies to them as well, is they are not necessities, right? When times are tough, tariffs are being talked about, straits are closed, and everybody's worried about the crazy uncle in the room that nobody talks to, which is actually inflation, is that this is the kind of companies that people are not spending excess cash on. Do I believe we're going to be going into a cycle? It's especially the midterms and all that kind of stuff. And if the trade opens back up, I think people are going to be buying these companies like crazy, and they're going to go through a growth cycle. When it happens fast. It happens quick. You can see back here, there are gaps up. They have gaps up. And way back here, the rise is sudden and quick, and then the fall is also sudden and quick. Just like back here a couple months ago in October, there was a massive gap down. Elf will, if they continue on their own trajectory right now, I have no doubt in my mind they will have this gap up and they will have this rush back to it that will be, I wouldn't say life changing, but portfolio changing for sure. A lot of us 50-60% up, that's a massive move, and I think they're priming up for it. It just takes a little bit of a kickstart from real world events or whatever it may be to get us there. Palantir. So I don't own any Palantir directly. I do own some call options. My plan is the same exact thing same exact plan as last month. If it drops down below 140, I'm going to pick up some call options. I picked up 175 call options, and they are currently up 58%. Once we hit 155 to 160 on the share price, I'm going to sell those call options and pull my profits. And then if we go back below it, I'm going to do the same thing on repeat until it no longer works. And hopefully I get out before it no longer works. It is high risk, high reward, but at the same time, it is a strategy that I'm trying to implement, and it's causing me to learn and stay on top of Palantir. If Palantir starts raising like crazy, I may look into purchasing actual shares of Palantir. Sadly, I missed when it was at $6. Just wasn't investing at the time. Wasn't paying any attention. It was kind of already hitting massive strokes to the upside when I started actually investing in this portfolio. And so sadly missed out on that. It would have been a great opportunity, but we can play what ifs all day. I'm still making my money on Palantir. This strategy has worked about 3 times already. And, I'm sorry, I'm on my 3rd. It is currently working. Does not mean it's going to work forever. Please make sure you do your own risk analysis before you make any kind of purchases, sells, whatever it is for your own portfolio. It's just what I'm doing. We're going to take a look at Palantir's chart real quick just to see where we're at. You can see right back here is where I was buying. We were at the 120, 130 range, and now we're back up to 144.07. I do anticipate we'll be seeing this 156 resistance soon. I think by the end of the month, they're about to report earnings. There is one major issue with Palantir, especially if you guys are someone who owns Palantir directly, is it's kind of stuck in the same cycle as Nvidia. They're going to report excellent earnings. They're going to have massive growth. Is it going to be the downturn from when they were hitting 70, 80 clips? Then their price may take a hit currently. People who are investing into high growth options hate it when the growth starts to downtrend. Now, I'm not saying they're going to have negative growth or they're not going to have good growth. It just may not be 70, 80%. It might be 60%. That's still amazing growth, and they definitely deserve any kind of rise in price that they will receive. But everybody who was hunting the 80, 90, 100% clips, they're just not going to be interested in it anymore. And then you're going to have to wait for the cycle for us, the value hunters, to come in and pick up those shares. During that cycle, you're going to be stuck in a fluctuation in between essentially a price point. I think we're already stuck in it. I'm hoping I'm wrong. I'm holding these call options through the earnings season cycle, and they're going to be calling. I think they post earnings in like 2-3 days, something like that. So I anticipate that they're going to have great income statement, great earnings, great future guidance. I just think people are it's not going to be enough for them. For current growth investors, they're going to start selling out things here. That's my thoughts. Hopefully I'm wrong. Hopefully it continues going up and everybody makes a lot of money, right? SoFi, current price is $16.43. Latest buy was at $16.25 and $16. They did post earnings during this last month, and they had, in my opinion, great earnings. They know exactly what they're doing. They're setting themselves up for the best that they can. They did take a hit. It was mostly due to future guidance. They didn't really care for that as much, but I believe it is severely undervalued and it is a heavy buy under $20. I'm going to be picking them up all the way until they hit $20. They were just at $20 a week ago, April 17th, 2 weeks ago. They were trading right around that range. We just hit that resistance. We kind of had a bounce back. We don't really have good momentum going into it. However, I think SoFi is going to be a strong buy. This is not a buy now, sell tomorrow stock. When they hit $20, then they're going to be going up to 23, 24. Then they're going to be going back up to 27, 21. It's going to be all over the news. People are going to be going crazy. People are going to be buying in like crazy, and that's the point where we start making up our mind. Is it better to hold, buy, or sell? If it goes significantly over value, you don't want to keep buying at that point. So as of right now, SoFi Technologies is a buy. They are doing great things. Really love that SoFi is a strong player in my portfolio. And we're going to move into SoundHound. I bought at $6.69. I'm gonna stay on a buy below $10. They are currently at $9.56. So if you would have been looking around where I was calling out to buy, that's pretty good. Granted, they were close to 52-week low at that point, which is hard to kind of really go down since they didn't. But we had a massive spike on Friday. I think once again people are going to start seeing where the money's going with AI. They're gonna start actually seeing that this crazy capex from Mag 7 is going somewhere. It's going into these kind of companies. They're gonna do amazing things. I totally foresee them hitting that 1128, 1130 resistance marker. I think they're gonna go above that, and if they go above that, I would be hunting to start seeing close to that $20 range. Will they break into 52-week highs? I'm not sure about that, but I am a strong buy under $10. We're still under $10. If they drop at all this coming up week, I'm going to be purchasing more. And at that point, we will start seeing where they're going to go. And I think they are a strong contender, especially when they they announce earnings. I believe they announce at the end of May. I think we can start seeing close to $20 again. Don't miss out on your chances to pick up some of these great companies at these low valuations. All right, next one, Nike. It's currently at 44.40. My average cost is 52.69, so I'm actually still DCAing and trying to lower that. Latest buy was at 44.02, 45.61, and 46.27. As you can see, I continue buying Nike. Nike is one of those plays that it is, when it goes, it's going to go quickly. Everybody's going to be on board. They reported earnings. They had good earnings. They're growing where they need to be. They're just not growing fast enough for what people like. As you can see back here, that gap up, you go from 60-ish to 74 in a day. All these gap downs. But once again, when they go off, they really go off. So that's exactly what we're looking for. We're hoping for these other gap ups, and then we're going to start looking at possibly selling some of the Nike. I don't know if I'm going to hold this one forever. I'm just not a huge fashion guy. It doesn't really interest me. But the company, understanding the fundamentals of it, and knowing that this is going to be one of the first companies to turn around in that sector, I think is a great indicator, and that's exactly what I'm using Nike for. All right. This one I was excited for, especially in this video. AMD. I sold all my call options at pretty significant profits. They would have all been priced much higher than they are when I sold right now. But once again, pull profits. Call options are severely risky. When you can pull your profits, you need to be doing so. I am holding all my shares for a 500 minimum price target. It's currently at 360.54, and average cost was 204.84. In my video, they were at 191 previously was the call price, which would have been back in here. We have a huge run up. We're into the all-time high exploration area. Where will AMD go? I fully see it becoming a $500 stock by the end of the year. Now, anything could happen. They're about to report earnings. This earnings report this coming up week is going to be massive for the company. The reason being is it gives us a view of future guidance. If they up their future guidance, whew, man, they're going to keep going. If they remain the same, all right, good chance we break into the $500 mark. If they lower future guidance for whatever reason, I could see us going back down to the $200 range. As of right now, AMD is a hold for my portfolio. If we have that massive spike down, we should not be in that territory anymore. If we have that massive spike down, I will probably pick up a couple more call options, because why wouldn't I, right? That's a part of my strategy, and AMD is a very solid company. It all depends on future guidance. Obviously, if they outperform first quarter, future guidance stays the same, they're still going to do well. If they outperform, future guidance is increased, oh my God, it'll be a really good thing to see. All right, we're getting into ServiceNow. ServiceNow is the one that reported earnings. They didn't like the future guidance. Average cost was $83.71. Of all the shares that I own, I bought at $82.05 and $85.37 again, and it is currently at $91.16. So we're already starting to see some pretty good gains. And so we're talking, I was just buying right back here when this drop happened, and over in here when that drop happened. If we see these other SaaS companies do well, guess who's going to be trucking along with them? ServiceNow. They're a great company. They had great earnings. They're right on track for exactly what they need to be doing. Just right now, people are not seeing that AI involvement and how much it's going to increase the value of these SaaS companies as well. All right. I've already covered SaaS companies enough. We're getting into the trade desk. bought at 20.98. I called that out. My average cost is 35.65, a little bit high. It's currently at 24.24, and I is a buy below 30. There is a reason for that. They are expanding. They just need to continue proving exactly what they have been, which is they're not losing customers. If they start losing customers, I'm going to start selling my shares. Want to get out before it's too late. However, I don't think that's going to be the case. This coming up earnings call will be a game changer for the trade desk. You can see we have actually a lot of strong uphill momentum. Once we broke above this resistance, we keep kind of bouncing down, checking it out, and seeing how we feel. But I think that earnings report is going to be the indicator that gets us back up to this $37 resistance. We are going to have massive resistance at 34.87. And also, there's a lot of people who owned the trade desk from back here. When you were buying back in these times, it is very hard for them to hold on, see a massive spike up, and continue hanging on to their losers. I preach it on my own channel. You need to learn when to drop your own losers. And in my opinion, the trade desk is not a loser yet. If they start losing their bigger customers, then absolutely we need to revalue what is going on. I think they still have a lot of growth potential behind them. I think they will be back in that $100 range within the next couple of years, which would be a 4x from here, which would be fantastic to see. So trade desk to me is still a buy. That earnings report may be the indicator that changes that. I will do a video after the earnings report comes out and update as needed. Adobe, SaaS company, doing great things with AI. They're implementing it in their own platform, and we're just waiting on earnings and for people to start realizing that AI will be engulfed with them and highly threaded into their own system. It's not going to be one or the other like people keep indicating and saying. Adobe, I believe I had a couple buys. I bought at 246.96 and 237.32. I did own Adobe previously. So my average cost is 265.20. That brought it down pretty significantly. It's at 250.71. It's still a buy. I think we're going to be a buy anywhere pretty much below $300. As we get closer to $300, though, I'm going to slow down. And currently, I'm going to be on hold until the earnings happen. I do actually think this is going to be one of the turning points for SaaS companies. I think we locked in the bottom. There may, especially after ServiceNow actually reported their earnings and they had another drop down. I think people finally came to the realization that, hey, just because we believe it's going to affect them, we already priced that in. So I believe they already priced in the downside fully, especially when Adobe was down here in 225. Wow, that's wild to me. It hasn't been down that low since 2019. 2019. That's crazy. 7 years ago. So Adobe is a buy still. PayPal. PayPal, I've said it once, I've said it multiple times throughout my videos that I believe they're going to end up selling PayPal. I think somebody's going to come in and buy them, or at least offer. If they offer, people are going to go crazy and the price is going to go up. Right then is going to be an opportunity to pull some profits. My average cost is $61.60, current at $50.44, and I bought most recently at $45.82. So my most recent buy is actually pretty positive. We're up above. I'm in hold territory for PayPal. Back in here is a great opportunity to be buying in the month of April. That was the only purchase I made of them in April anyway. I would have purchased back here, but I also was buying PayPal up in here at the 66, which is why my DCA is a little bit higher. But I am viewing PayPal as a hold. I want to see what ends up happening with earnings and then see if somebody is going to come in and give them an offer. RR Rich Tech Robotics. This one's kind of a fun one. I own some call options on them, but I bought at $1.95 and I bought again at $2.01. They're currently at $2.51, so I've made quite a bit of profit on them, or I'm still holding quite a bit of profit on them. They are now available in the Microsoft Marketplace. So if you remember that they have a lawsuit going for a pump and dump because they said that they had a hands-on partnership with Microsoft. And Microsoft came out and said it was just standard partnership and it was a giant pump and dump, and everybody believes it was that way. They're now on Microsoft Marketplace. I think that's just comical. I don't know why. It just kind of makes me chuckle. They installed the Atom Service robot in Times Square and it serves coffee. Shaquille O'Neal was the first one to get coffee from said robot, from my understanding, or what I read in the news. RR is still buy anywhere under that 262 mark. That's a great buying opportunity. I do see them actually back in the $4 to $5 range by the end of the year. They got to report earnings and they got a lot of good things going on for them. That will be great to see. So, with that, that is all the stocks that I am looking at for the month of April that I already looked at, bought, sold, held. And then in the month of May, I'm going to continue with these same set stocks. As stocks grow, enter, I still got Plug Power. Still watching that one. It's a hold right now. It's not really buy or sell. Nothing really crazy going on. Bloom Energy just took off and it brought Plug Power up like 20, 40 cents, something like that. It's great things to see when you're in these kind of picks and shovel-esque kind of companies, and when they start moving, they move big. Sadly, we miss out on a lot of them. SanDisk in the last year is like 2,000%, something like that. 20x, that's crazy. I was looking at SanDisk, but at the time, I had a little margin in my account I was trying to get rid of, and it just didn't pan out. And so I missed that opportunity. That's why when you hear a lot of us investors talk, we say keep a little bit of cash on hold on the sidelines, ready to deploy. I failed at that. I wasn't following my own guidelines, and I missed my opportunity with it. Would I have held for 2,000%? I don't know. I'm too big of a proponent of pulling my profits. I understand that you miss out on future profits by doing that, but you just need to ingrain it into your own system and your own portfolio of when you want to buy, when you want to sell, what your price targets are. And you need to make sure you do your best to stick towards them. Remember to pull profits and sell your losers. And if you enjoyed this video, smash the like button. Go back and watch some of the previous videos. There's a lot of good information there. Subscribe to the channel if you want to see more. Thank you for watching.